Good afternoon, everyone. BC Richfield here, coming to you live, not from London today, but from Little Escape Bolt Hole down in Suffolk, where I start the year. A really big shout out to everybody watching this live today, as well as everybody watching or listening to this on recording. Jojo, how are you doing, my good friend? And everybody else. Ladies, gents, if you do have any questions throughout the show, or if there's anything that you would like to ask, or if there's any charts you'd like to cover, I will try and make time towards the end of the show. So please do pop them in the chat. Apart from that, we are going to take a look at some of the key events obviously affecting the markets this week. Please do remember the US today. The US markets are shut. So as we discussed with the team this morning, it can lead to a little bit of stagnation. There's obviously a lot of liquidity pulled from the market. So we're waiting to see how Monday develops and then looking to be a little bit more active from tomorrow onwards. Please do let me know if you can hear me okay, if all the visuals are coming through okay. Got a little bit of a travel setup on the go at the moment. So let me know how it's going. Craigie boy, how are you doing? Hope you're well, mate. Hope that work isn't getting too much in the way of a good time. So, hope everyone's doing really well. Let me just mute my Discord to save that bleep coming through all the time. Well, please bear with me a little bit of patience because I'm going to be flicking between. I don't have my home set up at the moment with the glorious multiple screens. So doing this off the laptop. So I will kind of pop back and forth between the screens to get to your questions. But if there are any problems with the audio or anything, let me know. Craigie boy, thank you very much. Okay, so where are we? We can see on the screen at the moment, we've got Bitcoin on the 4 hour. So the Bitcoin report, which I released last night, was discussing the fact that we've had this nice expansion. All right, we're going to look at this on the higher time frame. This is the range I'm interested in trading. And in terms of trade setups, this is a higher time frame bullish inefficiency or gap, fair value gap. And this is where we get an impulse move up, inefficiency in price pairing. Yeah. So, or liquidity, as sometimes if you're looking at these at opens for intraday traders, for example, it can be when market makers pull liquidity from the market. But ultimately what we're looking for are these areas to be rebalanced. They're really, really good areas that price often revisits to make them efficient. So how can we overlay these two areas? Well, the main principles that I look for in trading, I'm trying to find out what's capping price, what's supporting price, all right? Where are the buyers managing to defend? Where are the sellers managing to defend? And as we just pop ourselves back out here onto a daily view, we can see quite clearly here, if we're looking at this almost like a midline here, all right? I'm just going to hide this for a minute just so it gets rid of the distraction. But quite simply, you can see the impulse move lower here, small inefficiencies in here. But we had this was the main drop, all right, coming out of this consolidation here. And the key thing here is that we've come from an area of balance above. We've expanded, yeah, or a better term for this would be an impulse move lower that we've seen in that leg. Let's clear that up a little bit. And then we can see what happens here when we leave these inefficiencies in the market. The market often likes to revisit these before making its next decision. So what it does is it gives us an inflection point, as do these areas of consolidation. Because what I'm asking myself here, and what leads to this red line being drawn here as a target for price if we hold this breakout, is, okay, if this is where sellers took control of the market here, are those sellers still there? Are they still engaged and active? Or are they not there? In which case we often see price move through these levels pretty quickly. Just to give you an example of that, we can see clear resistance up here. All right, let's look at this. So find you a nice clean example here. If I highlight this, and it is a very small consolidation at the top of this move, right? But it's also very powerful because price has started to make a recovery here. We just started to expand higher and then we dropped again. If I just zoom in for you, we can see the inefficiency, the gap or the fair value gap that's left within here. Price rebalances that, respects this area where sellers took control back of the market, and then we sold off to liquidity resting lower. When we're seeing these wicks come down and then we get the recovery is when we look to trade this from here all the way up to here. Absolutely not. I want to see what happens when we get to these areas. Now, as we can see here, price gets there initially and then starts to consolidate underneath, which I take as a fairly bullish sign. We then see the aggressors step into the market here and completely take out the passive sellers. When we see this, very, very similar to what we're looking at the moment, especially as we go across, we look at this on the 4 hour. It's just, we want to see these areas hold. We either want to see a slightly deeper retracement into here back, so we get that classic resistance to support flip here, but also looking for action within the inefficiency in case price wants to run hot. So let me just clear this up. And we're going to apply exactly those same principles at the moment. And that's why I like this move higher, because we've had a very clean move. From the lows in here, you can really see the build up. Let me hide these for a moment. You can really see the build up as price driving into here, and these wicks are showing absorption. They're telling us that buyers are stepping in. And ultimately what's happening here is from the drive down here, it's just telling us that buyers are willing to step in at a higher price, right? All of these dips are getting bought up. I know, buy the dip, sell the rip. Sounds simple, right? But actually, if you look at it, there's a lot of kind of wisdom in those words. So as we look at this here, expansion, retest, expansion. Now, this is really key for me because when we broke down here around about mid-November, this area has offered key resistance. This is the first major expansion that we've had above that. We've gapped above it, closed here. So I'm looking for this area. All right, but I want to see price having a good reaction here. So today, for example, pop back to the 4 hour, the trade plan is for price to come back down here and then for us to see a quick recovery back into the range. Obviously, we've not got that. But am I interested in switching bearish here? Absolutely not. Okay, we've got the daily gap. Yeah, the inefficiency here. This is where we wanted to see price drive into. We've got the range above here. So if we step back into this range, this is where our classic range plays come in. All right, step back into the range and that's it. Then we want to trade this up to the midline. All right, but actually first for me is going to be the point of control. And then if we get back into the upper portion of this range, we're just looking for the same kind of principles here for range trading. All right, remembering that mean reversion, consolidation, ranges take about 70% of the market. All right, so just always worth considering that price is spending most of its time in a range. All right, of course you need to build context around that, and that's what we're looking to do as we use our multi-time frame analysis. So what's the playbook at the moment? Like I said, with the consideration for the fact that we're in Monday, the fact that the US markets are closed, I'm looking at this and I'm saying to myself, okay, I'm going to be an observer today. I want to see how price action comes out. I want to see how the market reacts. Obviously, we need to keep an eye on news as well. And obviously, week starting Monday, the 19th of January, with our focus being on the US markets, we've actually got a pretty clear run through until Wednesday. We've got Trump speaking at the pre-market open, which is 1:30 p.m. That's obviously UK or UTC time, 8:30 US. That's AM, of course. Now, this is always going to be interesting with him, right? We've got geopolitical tensions emerging now with Greenland. There's obviously continued escalations, obviously, as we're seeing on the side with Ukraine and Russia. There's a lot of these kind of tensions building around, and it's kind of, Trump is really, I don't know, really stirring up the hornet's nest on this front as well. So we need to be very aware of that because he's probably been the biggest market catalyst we've seen. So that's always worth keeping an eye on. And then we go into Thursday. We do have pending home sales on Wednesday as well. Not something I'm really kind of homing in on to expect to make a massive result, but we have seen a little strengthening in that side of the market in America. So it does pay to take care of that. And then on Thursday, we're dropping with, you've got PCE price index, we've got GDP, all right, GDP index, unemployment claims, core PCE price index from October. So we can see we're getting that news hit later in the week. Why is this all really relevant? Well, I'm looking at it that if we can make a recovery today, we've got a clear run through until Wednesday before any potential derailment. But, it really could go either way with Trump. He's very pro-markets. He's very pro-growth. He wants the interest rates and that coming down, of course, but at the same time, a lot of his actions are kind of anti that in terms of what's good for the markets, because the markets are not massive fans of uncertainty, and he really does deliver that in spades. Something I'm looking at here, by the way, is the fact that we've come into this consolidation. All right, if we look at this here, this consolidation that we tagged into, and we've had a really nice wick down into this and started a little bit of a recovery. This was the consolidation that led to this rip. All right, so if I was looking at this in terms of a playbook, I'd be saying this. I'd be saying, well, okay, I'm going to remain patient. We've got the playbook to go long. Very, very dangerous area to go short here. But if we did close, for example, on a daily scale below this, inverting this gap, meaning that that inefficiency didn't manage to support price action and move it higher, I would then be looking at this and I'd be saying, okay, well, this kind of area down here, it all of a sudden becomes of great interest, because if we start losing this here, we can expect price to drive back down into this range here, but then we have lost that breakout if we look up here on a daily scale. So again, one of those weeks where we just need to apply a little bit of caution, take a little bit of a breath, but also zoom out a bit and kind of take a look at this on the daily and say, well, actually looks pretty good here, so it's one of those things where we're just going to have to be patient, I'm afraid, as the week starts to go on. Jojo, okay, interesting. Yeah, I think BTC bottomed. I think it's a really, really good place for it to come in and bottom, for sure. It's going to be really interesting to see what happens with this gap today, I think. And I still think we're going to need to go into tomorrow a little bit more before we really see it kind of fully materialize. But I agree. I think it's shown a lot of strength. I think, but like anything, the issue with predicting these markets at the moment is the president of the United States, right? We could see a whole host of different things come out. So I think we probably survive through today, tomorrow, not really seeing any major reason for the indexes and that to sell off. So as long as they hold up, I think we can see that strength in crypto as well. And then as that kind of starts to go through, it's then very much going to hinge on the Wednesday releases and with Trump speaking. And from there, I think we get a slightly clearer picture how we head into the rest of the week. But then we're slamming into that wall of data on Thursday. But again, we'll have to wait and see. But GDP and that, not really seeing major expectations for that to derail the risk bid at the moment. Taking a look to just layer a little bit of context around this as well. If we're looking at the dollar index, we can see the DXY. This thing has just been ripping. All right, back above the midline here, price really looking strong. That normally does put a little bit of pressure on risk assets. And my main concern really today is the VIX, right? The volatility index. We just really kind of seen that spike heading up. It just, if this thing starts to get above 20, then I think that's where we start to get a little bit concerned. But as it stands, I think it's okay. Elevated today, right? But if we look at the indexes too, they've taken the hit on that. Elevated VIX, risk is down for the day. Again, markets are very thin at the moment because the US are not participating. Crypto is on the losing end of that at the moment, unfortunately. Let's take a look at Ethereum. Remember as well, guys, if you would like me to take a look at anything, please do let me know. We'll make some time for that today for sure. Let's see here. Yeah, nice. We've got a nice clean chart here. So let's apply those same principles and let's take a look at where we are on Ethereum. Now, the team caught some absolutely magnificent longs and that filtered through into some great alt calls as well, because we saw here that we just had a lot more room to run here on ETH. When Bitcoin was kind of coming up into resistance here, this consolidation area through here is what's really majorly of interest to me. Yeah, we spiked above this here. If we look what happened, we broke down key support here. Price broke down, lots of energy, lots of momentum to the downside, leaving those inefficiencies again. We saw this consolidation here, and then we saw this fake breakout, fake out deviation here to the highs. Pricing closed back below the range here, again with displacement, again leaving these inefficiencies, and the market went lower. Found resistance again here, found resistance again here, and we're now seeing resistance again here. But it does mean that looking at this, we've got this nice daily inefficiency here, which is favoring the bulls. And very, very similar to Bitcoin, really, except Bitcoin's doing this above resistance, which is obviously even stronger. For me here, the playbook on ETH, I really need to see this area hold. Strong move above here, right? Love to see us kind of engage with these highs as well, get that kind of rejection there, but really kind of test into those. And then just looking again in here for this kind of area to hold, classic support resistance, or in this case, resistance to support flip. And, ideal world, as we see with these moves, we want to see a high energy move within those moves, seeing those inefficiencies, those fair value gaps price can drive back into. And then within here, depending if you're a pure price action trader, whether you're using order flow, volume, etc., we can then look within here for those kind of key pullbacks. On the side of volume, and again, I know the purists in here because you do reach out. Absolutely agree. See, Sierra charts, live feeds. You've got a lot of other ways. I personally use Bookmap as well for order flow and volume data. The reason people are critical of TradingView is because it doesn't use tick data, right? But it's something I've always used with great success. So I do understand that there's more accurate data out there, but again, it's not always available to everyone, and TradingView do make that available. So you have to massively respect that. So as we look at this here, right, just looking at this expansion, and really what I'm interested in, if I want to refine these gaps, because we can see the green box shows the price action gap that we've got here. And in fact, let me make that fully accurate here to here, right? Then if we're refining that, if we look in here, right, at the volume, we can see we've got this area of low volume here, these low volume nodes. So if we look at this and we draw this across, we take it from the hole down to the volume shelf, I'll probably pull that up to here as well, because we've gone into an area of low volume there. Well, now we kind of refine that a little bit more. Now we do have this little volume shelf here and this low volume node down here, right at the value area low. So seeing price wick into this kind of area and seeing that reaction is positive. This volume shelf down here looking to support price as the value area low does. However, unfortunately, we don't have the same situation that we do with BTC. But if we saw some really strong reactions in here, driving this up into the liquidity that's been left here, and here, well, if that area has been, balanced to say, I know we didn't come to attack that, by the way, then, intraday trades would be aggressive, but trading them up into here. But like I said, I wouldn't be looking to do that today with the conditions that we've got. Let me just take a little look across at the questions. US earnings this week again. Volatility could continue. Another great point there from Jojo. And absolutely, because as we look at it, earnings season is very much in full flow. We've had the bank earnings come out as well. And let me just check this. See what delights that we have coming up for us today. So what do we have here? 17th. Yeah, we've got a new print today, more finance coming out. What I'll do is actually, guys, to save you, boring you through this, but to save you running through this now, what I'll do is I'll put a post out later with the earnings that are coming out. But again, like Jojo said, as we're looking at this, it's kind of, it's all about this refinement and understanding this higher time frame view, not just from price action, but what the markets are doing, where the major players are looking to position themselves. If we look at traditional markets, I believe around about 4 to 5% is made up of retail, right? And that's not a derogatory term, everyone. It's you're talking about major institutions, whether you call them institutional money, smart money, etc. Your major funds, banks, etc. That's really where we want to be aligned with, right? If that's where the flow is going, then that's where we want to align our bias. And then we want to break that down using price action, or of course, if you're a fundamental trader, on chain, etc. Everybody has their own poison. For me, it's price action. It's something that kind of really speaks to me and I see very clearly. But it doesn't just mean that I can just jump on a chart and go, oh, hey guys, here's a gap. I'm just going to long this, right? It's all about the context around it. Like Craigie Boy says here as well, and it's really good actually to see that you're enjoying that side of things. It's just all about, again, that little bit of refinement, as we can see on the chart at the moment. If we can look to kind of take trades in this area rather than this whole area within here, when we drop down to a more actionable time frame, quite simply in here, if we look at this large drop, and we're just going to refine it in the same way, I'm more interested in this high leading us down to here rather than the entire leg, because this is really where market participants, sellers, started to take control here. Right. Well, what I can see immediately as I zoom in We got the value area higher here, so we want to be aware of that. But actually, and I'm just going to use these for ease, if we mark up the kind of first area here, yeah, here's our low volume node. So if we look in here, we could kind of say, okay, well, actually, from an intraday perspective, then we're starting to see some decent price action recover here. We obviously saw the major sell-off overnight. Price started to consolidate through Asia. We come into London. London's starting to break out of this. So if we look at the range now, and again, would just heed the warning from earlier, I'm not looking to be particularly active in this at the moment. I don't like the low liquidity conditions. I very rarely trade intraday on a Monday anyway. I like to see how Monday's range plays out. But if I was looking at this, I would be saying, okay, well, if we look at where the consolidation started here and we draw it across to where it is, and in fact, let's draw it back to here towards the end of the London session, well, we've got a beautiful breakout of this range here, right? Yes, we're driving up into this. Yes, we have just had a large drop. But if we remove all the noise for a moment, zoom out and focus on our higher time frame context, what we're saying is we're now back within this area, the lighter green area. We know this is just a wick below. So on a higher time frame, we can look at this whole area potentially being a deviation, right? We don't know yet, but we can look at it in that way. And then as we look to refine this, quite simply, if I was looking at this intraday today, this is where I'd be interested here, because we've now had this nice breakout above here. We've completely taken out these wicks here. These are often a great area, by the way, to look for price to be supported. Yeah, price coming up into here. We can see this whole area of resistance, especially if we draw it back through here. So when price has that nice impulse above, looking for this area to offer support, we're looking for the gap. Again, just refining this down time frame by time frame, using the context and overlaying it. And I'm saying, okay, well, this is probably a good area within here for longs. What would be the opposite plan would be, okay, let's say we enter along here and we get stopped out, and we step back inside the range. Yeah, then that's something we can look intraday to take down to the point of control and ultimately then potentially the value area low. But as it stands for me, that's the riskier play, because overall I am still looking for some bullish moves forward on the higher time frames. So that's quite nice. And once again, you can just take, this is the fixed range, the FRVP, by the way, fixed range volume profile. You can find it on the menu bar across here. And for anybody that is really new to this as well, into TradingView, if you've got any instruments that you use a lot, then you can just click these little stars next to it and it will put it on your fast menu. You can move this menu wherever you would like. All right. So again, looking at this in here, this is the small consolidation before price had this impulse move higher. So I want to take the low of that up to where we are at the moment. And remember as well, when you're drawing these, if you're not doing it in real time, remember you're going to have to be dynamic with this, because once that candle's come up, when this candle closes, this is all the information you have. So you're then looking within here and saying, well, how can I refine this lower? Yeah, and actually you can see through here, very, very low volume through this area. Yeah, so this does overlay pretty much perfectly with what we see with the price action. If we move this one further forward, yeah, when we get the close of this candle, we can see again, price just still respecting this area here. So this, you know, if we were to drive down onto a very low time frame, this would be the kind of setup I would be looking for, which would be a sweep of a low, price to take the high. All right. We've got a breakout of this with momentum. Again, same principles. Identify the areas of low volume. I'm not interested in this volume tail, by the way. See these like low prints up here with no high. What I want to see are these areas, the low volume nodes that are protected. I'm going to do this in purple so it stands out, guys. All right. That we've got this protection here. So you see the shelf. You see the volume shelf coming in here, and we can see this is the projection here for where we'd want to take our entry. Now, don't get me wrong, you need to be careful with crypto, taking these things comparatively on indices and that, for example. Well, with crypto, the stop loss, by the way, would be below the value area low if there was a volume shelf there, but I do like to put it just under where you start the range, and then you'd be looking to trade it higher. The issue you would have with this position here on ETH, which is why I like to trade crypto on the 3-minute, is this is a 0.082%. You are going to pay an exorbitant amount in fees, all right, depending on obviously the volume you trade and bits and pieces. And yeah, I know, you know, you'd be like, yeah, but BC, you probably don't pay fees because of the exchange. It's like, actually, the exchanges that I trade with, I do pay fees. It's pay very heavily reduced fees most of the time. But for the average person, it's not necessarily something that they have access to. All right. So we want to make sure that the shows are inclusive. Let me just take a really quick look at the questions. Whack, my friend. How are you doing? Shay as well. Great to have you with us, guys. What have we got here? Craigie boy, last night's drop was out of hours. Whale driven with US closed. Might have one leg down because of low volume. Exactly this. So this is what we need to decant now. It's always very, very difficult to know, depending if you're using on-chain metrics, bits and pieces. Excuse me for a second while I sip some tea. But exactly that, the low volume. And this is where we're looking at those conditions as well, like we're talking about with traditional markets, with that volume, volatility, liquidity, all being ripped from the market by the US being closed. That's where we just want to be a little bit careful. But this is, again, where the higher time frame bias becomes so important, because if you're sitting there and you're kind of saying, okay, well, you're looking at I know this is a 1 minute chart. Let me take it off of this for a minute because it's a bit ridiculous. But if you're looking, for example, at the price action, you're sat here and you're like, oh, okay, well, price is now starting to move up, right? We got bullish market structure, right? This is it. I want to start to long, but you're not taking on board the overall context. You're not looking at these key areas where price could potentially reverse. Look, it's gambling with extra steps, like anything is. What you're doing is you're building a thesis based on a set of repeatable strategies that are tested over long periods of time and excruciating amounts of data. But you have to sit there and accept that most traders will be wrong. Successful traders will still be wrong, sort of, anywhere 40-50% of the time. So I'm not going to go into it on this show. We provide lots of good material on it. If anybody is interested, I'll be happy to do some free posts and stuff on Twitter as well. But where your risk and trade management really, really comes to the fore. But if we're sat here and we're feeling a little bit confused by all of this for whatever reason, and then we step back and we go, right, okay, let's just go to a daily for a minute and forgive the extra bits of noise on here. Well, all of a sudden on a daily, even if I keep this context on here, I'm saying, well, why am I looking for longs today? And you think, well, because the market on the daily here is bullish. Yes, we've just slammed into resistance, but we're away from that now. This ultimately could be a really healthy pullback. And what do most people say? Most people, when price does some absolute rocket ship move like this, people say, God, I wish price would just come back to here and then I'd get in. Then price does something like this, people buy it, and then it does this and they just panic and sell. A really good bit of advice that I was taught early in my career, and again, nothing is a golden ticket. Always recommend, well, it's imperative that you all go and do your own research on this. Me or anybody you receive any of this on, this is purely based on my experience in the markets over the last kind of 7 or 8 years, like with, heavily obviously crypto focused before I was doing mostly FX and equities. With this kind of move here, I don't really want to short that. I mean, I definitely don't want to short that. And this is where people can get trapped, right? Because we've got this displacement to the downside, leaving this gap. So people are like, okay, great. High energy move to the lows. We've closed below this low. Happy days. What I'm actually looking for is the last place that, in this case, the bulls had control of the market. Because if we've had this expansion, right, and we've had this expansion from this area here, into this minimal pullback, into this minimal pullback, then price pulls back a little bit deeper. There's no problem with that. It's still really, really healthy. And this is where I think most people would benefit from using volume. Because if you look at the expansion from here to here, out of this micro consolidation here up to the high, that's what I'm most interested in. And then we see in this initial move, bearing in mind I've only drawn it to here, see the initial move come back to this low volume node here. Beautiful. Tagged it perfectly. There's a really nice trade in there. All right. Again, depends what time frame you're doing this on. I'm looking this more kind of intraday and scalping. But then when we get more information here, I'm kind of saying, okay, well, actually, this expansion's going higher. I can continue to use this data here and look at the legs and look at the low volume nodes, sorry. What I actually like to do is just expand this up a little bit further, right? So I've got all of this contained. Now what I've got is a couple of really interesting things. So I've got a value area high here. I've got a point of control and a value area low. So I've got this upper range. So all of a sudden, if we just extend these across, I'll just leave them fat for the moment. You guys will get the idea, right? But then we can see, let's say you were, you did get a bit excited. And also remember, there's no structural move. There's a shift here, but this lower low has come from a higher high. So as we then move down here, let's say you did get trapped in that short, fair enough. But then you're back in the range. So you're holding the range. Our range trading principles are really simple. Low to high, high to low. If you deviate, you step back in the range, you trade it to the lows via the point of control or the midline. If you deviate the lows, step back in the range, you trade to the highs via the midline or the point of control. Then when we get this nice breakout here, we see price close above this. Now, even if you're thinking, well, do you know what? It's not exactly the most convincing close in the world. Fair enough. If we mark in this high here. All right, then we see this expansion above this here, just meaning that any pullbacks, this would have been the Saturday, right? Any pullbacks in here, the dips are for buying as we move forward. So you've got that, but then you've also got this area that you really want to be monitoring, right? So let's take a look, and we say to ourselves, without the price there, where are these kind of key areas? Yeah, low volume node, low volume node, low volume node. We then bring price back into the equation. Bearing in mind we're now looking at this dip here, we can see this volume shelf here. You see we didn't quite drive down into this, but what we did tag just absolutely perfectly in here is this. Yeah. So, and then people will say, but you've got like 5 in here, right, BC? So how do you know which one to tag? Well, what you're doing is you're moving down the chart, you're looking for that. Then you're moving down your time frames, you're looking for that execution. Maybe you're looking to execute here on, say, like a 15-minute chart, right? Well, first of all, you've got your target. The reason that this looks different, by the way, guys, now to that, and you're thinking you've drawn that wrong, it's because we're on a different time frame. The volume will be different, right? So that's why I always want to mark this on the higher time frame, the level that I'm interested in. Key breakdown, resistance, price sells off. So when we get back inside the range, we've got a couple of different plays here. Here's our low volume node. There's the expansion. Again, take your volume profile, look at the expansion leg. Right. Then when you step into here and you get price, take out a high, take out a low, sweep a high, you can then extend this, get a new range, draw it across here, and this gives you your consolidation range. So you can then look, once again, wicks from the highs, wicks from the highs, wicks from the highs. Here's the breakout. Yeah, this is where you can look to get involved. Again, all aligned with our higher time frame bias that we would be looking long at this point. Or you wait patiently, you wait for price to step back in the range here. Beautiful expansion in, fine, this was over Asia, certainly wouldn't have caught this one. But then when we start to step into here, this is looking really nice. We've swept a high, price steps back inside. We sweep a low, price steps back inside. We take our volume profile out. I want to know where the consolidation is. I'm drawing this across to here. And then the New York session, which is my favorite to trade. All right, again, wouldn't necessarily have been my favorite being a Monday, but I'd seen this range in here and then beautiful breakout. Look how it retests the range or the value area high perfectly before we get that expansion. All right, just to give everyone a little bit of context, so I got some amazing questions and bits and pieces come in last week, or actually the whole of the year really, since kicking the live show back off. Really do appreciate all of you that have been stopping along for so long to come and listen to me waffle on about the markets. Let me just take a very quick look at the questions quickly in the scene. So Jojo, anyway, China data is still a bit slow, but industrial production strengthened a bit more. So copper continues. Fun enough, Jojo and I were having this conversation with a member inside the Bird Nest earlier, talking about copper and looking at this kind of AI-driven narrative for that as well, and why we think metals are going to kind of continue to perform well this year. Obviously gold, silver, but copper. It's piecing all of these things together, and then it's kind of looking at that within a little bit of a microcosm, expanding that out across the whole market and saying, okay, what supports this information? Is there a hunger for growth in the AI sector for a moment? Do they need chips in that? Manufacturing, bits and pieces? Does this all plug in? Sometimes we can make life a little bit simpler for ourselves than we do. Lord knows I've made my life overly complicated, especially in my younger days. How are we doing anyway, Wax? Shay, it's great to have you with us, guys. If you've got any charts or anything you want me to take a look at, please do let me know. Obviously, we will be doing our chart request show on Wednesday, or if none of this makes sense to you, do let me know. I'll try and break it down in a way that maybe it's a little bit more digestible. We do like to focus a little bit on education on the Monday show and then really kind of dive into the charts when I'm not waffling on about tea, very rarely politics or whatever, but hopefully there's enough value in it for everyone. So let's do this. Let's go over to Seoul. Right. So this was, let me have a look here. Beautiful. So this is the chart here that I released saying the reasons to short Seoul here, right? If you just go back and look on my Twitter timeline, all right? Just advising caution through here. This is, and I think my exact words were, this is such a beautifully clean range, all right? So let's zoom out a little bit, go to the daily. Why is this such a clean range? Well, first of all, I love seeing these long wicks showing absorption into here and here. Then again, when we displace through this, right? Just clean this up. Oh, if you'll let me. When we displace through this area here, just looking for this to form resistance. And I tell you for why. A really good, clear way to conceptualize this is buyers are supporting this through here. Then when they look to go long again here, because look, imagine if you had some limit orders on here, even on this bounce, that was a nice trade. You probably got out for a little scratch here or maybe at break even, but then you see this breakdown here. Now imagine you were in this trade here on a higher time frame, big old long position. Prices come down to you're holding through the drawdown. You're digesting the new information. You're saying, okay, I really expected this level to hold. Now, if price comes back towards my entry, I can take that opportunity to close that position out for minimal or no loss, and then I can reassess. All right. And this is where we see price then starting to slam into this as resistance. So until we get that high impulse move above it, what has happened every time that we have engaged? Now, people will look at this. Remember, you won't have a range from here all the way through. A lot of this isn't tradable, probably until here, because price breaks down. Then I'm looking for the first low to be swept, which is represented by this purple line here. Price recovers, steps back in the range. Then we see this engage with and price sells off. All right. So now, as we can see, right, let me just move this across to here. You can see price starting to compress. When we're attacking the highs, we're not closing above them. There's no displacement. There's no follow through. When we're attacking the lows, we're seeing exactly the same. So now we need to understand and appreciate that we are in a ranging environment, a balanced environment. And within those environments, we look to trade the range and the extremes. Yeah. Range high deviations back inside the range, trading to the range low, once again, via the midline or the point of control. And this has served us really well here. Longs, yeah. Shorts from here. Longs from here, longs from here, shorts from here. Stopped out on this. Yeah, price moves underneath the range. What do we get? Breakdown, price treating this as resistance. This is where you can look to go short if you've got the narrative that you're expecting further breakdown. And when we can see the Solana chart at this point, why wouldn't you? The market was very heavy. But again, make sure you're looking left for key levels, all right? Because if you look left through here and you're saying, well, where could price possibly be reacting from? Well, I would think, for me, I would certainly be looking at this breaker. This is just the top of the breaker, by the way. If I put the bottom of the breaker in here, why? This is the consolidation. Price swept offside. Yeah, took out those longs there, and price recovered this area here. These shorts are now offside. Deviation, strong expansion. This is where buyers took control of the market that ultimately led to all this upside. So if we look back here, apologies because I've done that in a stupid color considering that of the range. We'll put these in green. Then again, you can save yourself a bit of hurt looking for this breakdown here. Yeah. If, however, you start to break down below this consolidation, I'd be looking, because look, there's no consolidation down here. Price just drove into here and the buying was so strong that it just rebounded the market in this beautiful V-shaped recovery. This breaker here was the last micro consolidation that we had before price broke down and then broke out, which is why my focus is here. If we closed below this level here, that's not relevant now, then I'm looking at the low. All right. And we didn't get that. So we got this. So again, even if you didn't take that context on board and you get stopped out of a short trade, say this here, well, when you step back inside the range, which we do absolutely beautifully here, then we just, again, dips are for buying as we move this higher. And then if we take our range from here. All right, and even remember, you wouldn't have all this data at the moment, even if you were looking at it through to here. Let's move this back. Yeah. This was the information when price had just traded to this point. My vertical line here, right? So as pricing closes outside of the range, it then retests and steps back. I do like to see displacement outside of the range because my expectation is if 70% of the time price is ranging, my expectation is always for price to step back into the range, right? More of a contrarian point of view. If you see these breakouts, then like this, like to see that leaving those inefficiencies, those gaps to just show me that the pressure was, or the aggressor, in that case, the sellers were so heavily in control of that market, they managed to just make some serious territory. So from here, this is our value area low. Price steps out. As we just draw this dynamically forward, we can see price starting to step back into the range here, right? So we're looking at that and we're saying, okay, well, let's not forget about our main level, the support that this offered through here. Look at the resistance that this offered through here. So this is really the key area I want to see price back inside. All right, so if I take this forward, comfortably back inside the range here, if we take it to where we are now, we can see the value area low and high pretty much align here. And where were we here for Sunday's report? Saturday here. Deviation, price back in the range. The black line represents the first area to look to trade this to. All right, Sunday we got down there perfectly. I'm not a very active trader over the weekends. And now we've broken down between, now what's the plan? Well, quite simply, we're still in the range, right? So if we get something like this, then that's a really nice long setup to the point of control that's here. And that's what I'd look to take intraday. In terms of taking a breakdown from this, I would need to see, again, a large move through here, leaving our inefficiency in here, right? That is horrendous. Right, leaving the inefficiency in here. Then we can look for pullbacks to this, because then we would have the range low retest, the value area low retest, and obviously this bearish inefficiency as we look to drive price lower. And then we've already reacted at this consolidation. So any move lower, we would then be expecting price to move down to the lows and stepping back within this micro range. Remember, we're always looking for price, or I'm always looking for price to step from balance, out of balance. Basically, ranges expansion, and that's why we move through the time frames to find, those really, really clean setups. So Solana here looking really nice and clean. To be honest, it looks so good here on the daily. The plan is so clear. It's very difficult to kind of refine this lower unless it's going to bring you a better, clearer picture. All right. And all we can see here as we drive down to the 4 hour, we've just got a lot more information. And look, this sell off here Sunday coming into Monday with the US markets, I'm a little bit suspicious of that. It could be a bit of a reaction to a de-risking because of, the escalation with Greenland. And once again, it just puts that Trump speech on Wednesday into really, really sharp focus. Shay, my friend. And yes, certainly, Jojo, you are an absolute Pepe legend, Shay. You love the Pepe, didn't you? Let's have a look. I can't remember what we did this on, mate. Do let me know, because I know we TA'd this up recently, didn't we? Strange lack of liquidity there, isn't there? Let's look at the spot contract on this one, actually, because that will most certainly be interesting. Right, now I'm going to really zoom out on this one to the weekly, right? And actually, let's just get all of this nice and clean. Now, this is an interesting one, right? Because we had this massive pump here, which we often see, classic meme coin play, just wild expansion to the upside, not really allowing much participation. Again, your people accumulating down here were the real winners for this, but you've got to have that conviction. And it's certainly something I'm not massively good at. I've got wonderful team members like KZM and stuff like that keep me up to date on that side of things from the fundamental and the on-chain. But on a weekly scale, we can see we've just had a slight shift in dynamics here on Pepe. I don't know if you guys can hear the goals. Right, so we've taken out these. And again, look at this on the lows. The low that was set here, the week commencing 17th of November, look how well respected that's been. Price continually starting to drive lower. And then look at the difference here. Longer upside wick showing absorption, meaning that we expect price action potentially to move lower here. We failed to close above this high. Then we look at this day, we get this kind of doji, all right? So price comes up, sweeps liquidity from this high and from the low, and then we get that beautiful outside day. We then get the longer upside wick here, a lot longer than the downside wick, showing us that, again, that's bears taking control of the market. That's absorption, again, from these highs. The dynamic starts to shift here when we engage with these lows, though, right? Because as we can see, much longer downside wick into here. Longer downside wick into here as well. Then obviously we get this pop. Now, I'm not saying you could have caught the pop here unless you were very, very aggressively positioning from these lows, which absolutely good luck to you. I think it's absolutely fine as well, because when we look at this on the daily, I'm going to show you the breakout that we were watching here on Pepe that I completely missed, by the way, full disclosure. Now, if I take this, first of all, we draw in our visible range, yeah, which is our, and not in terms of the tool, just in terms of what we can see on the chart, the gap here, yeah, the inefficiency. So 3 candle pattern, you're looking for, in this case for bullish, the high of candle 1 to the low of candle 3. If they don't cross, this is your gap. And then within here, again, we're breaking this down using volume. Yeah, so we're just looking for these areas where we've got these low volume nodes, all right, as we step down. Now, I want to look at this on a daily chart, so I'm going to take this off for a second. We're going to move this back to here. Seagulls proper going for it today. And immediately, this gives me a little bit of information, all right, because we can see the low volume here. Price now working its way down below this, but we do have another area of low volume within here as well. So as I'm looking at this across, I'm saying, okay, well, this represents the low here as well. We displaced below that. Again, not interested in shorting this. Look at all the green boxes on the chart, looking for opportunities back to the upside. So now we're dipping down into this area of low volume as well. Now we can kind of say, okay, so price wicking into this, we're starting to see buyers start to kind of step in here. But it could also be a little bit of profit taking covering as well as we've moved lower. But what I do like, if I look left, again, remember why it's so important to look left, is where's the key resistance here, which is this. Right, and even if I want to move this back a little bit here and say, okay, where was the last point that the price was supported? Was through here on these wicks. So we got that big expansion. We're now back down at support. We've got 2 key areas that we've identified and refined using volume. So we can get rid of that. And we can say, okay, let's see if we get those setups. Let's see if we get that there. Let's now move this down onto the 4-hour. That's a really nice long downside wick. Again, it doesn't obviously guarantee anything. We can see here the 4-hour agreeing beautifully with this, but actually pushing the value area of the expansion here a little bit lower. All right. So now, in terms of a playbook, I'm looking at this and saying, okay, well, I need to see some form of recovery here. All right. Because if I wanted to be super aggressive, then I'd be looking for long trades here, excuse me, or within here. I either want to see that, or I want to see some form of structural recovery. Yeah. And again, looking for these impulse moves that allow us to kind of get involved as buyers here. And this is based more around, because you might be thinking, you know, especially if you're new to this, what the hell would you be looking to long there? Price looks like it's selling off aggressively. But that's the whole point, really. You're looking at this, you're taking that high time frame context, you're saying, well, okay, if the markets are going to show their hand towards risk assets, we might see that flow through. You might have some fundamental knowledge as well that's stepping in that says, okay, well, you know, do we have enough information here that we think the risk bid is going to be supported? If yes, we want to be looking for longs. The other way we can look at this, moving this down onto this time frame, and you would have to obviously have the patience of a saint, but as Warren Buffett himself says, you know, the markets are the perfect vehicle from the transfer of wealth from the impatient to the patient, and that's very, very true. No matter what time frame you're on, even if you're looking at things intraday, most of my worst trades is when I think I know better than the market. I don't wait for that confirmation. The incredible trader, the one Lance Breitstein, one of the very few, you know, Wall Street proven 100 million plus profit traders, has this theory that he calls it the right side of the V. Yeah. And I'm not going to sit here and preach his stuff, but it just, a lot of the top traders are looking at this in the same way. You're either willing to engage at the very extremes here or here. Yeah. Giving you the maximum reward for risk, but also inheriting the most risk, or you're waiting for some kind of recovery, some kind of structural recovery like that. Or again, looking and saying, where was the last place we had control? This whole move here is inefficient. Yeah. Fast up, fast down. So we're looking for the highs to be attacked on this move if we can recover this consolidation. So this, yeah, that would be the next playbook here on Pepe. Either super aggressive here if we get the reclaim of these levels. I don't think, even looking maybe on a 15-minute chart, if there would have really been much game in here. No, there really wasn't. Let me just move this back a second, and then just for any of you intraday traders, let's just take a very quick look at how we can do this. If I had real conviction here that this was going to be the play for the day, by the way, then I would be looking at, as we just kind of covered on Solana, we've really got a very, very clear and obvious range here, right? So I'm going to take the high of the breakdown to here. And look at this, the actual areas of low volume sit over this perfectly. So we're going to leave that on because it's the same as the green box there. Now I'm going to take the volume profile from the consolidation across. And here we have our levels, right? What I'm going to include here is the top node on the histogram here. And the same with these bottom two here. And the reason I'm using the bottom two on this one here, see these histogram nodes here and here, is because this is larger. So this gives basically the physical range, yeah, or what we can see, and this gives us the volume. See how they overlay beautifully. So if we were really bullish here and you wanted to be super aggressive with this and you missed the opportunity to take this off the lows, then sweeps of the lows and reclaims of this, bearing in mind the point of control is so low, up to range high would be the first play, and then you'd be looking for a retest of this area. And I would also be aware of these wicks in here as well. So seeing price come back up, retest this area, and then go long. That is a super aggressive intraday play. Certainly not one I'd be looking to take today myself. But if you've got some, you know, intel on Pepe, or if whatever reason you're seeing some action on chain, for example, that you think, okay, I just need the technical setup to back this up, then for me, that would be a bread and butter play today on that. I love that. Need the frog, mate. Look, we've all got our vices and addictions, right, Shay? So it's all right, brother. I'm absolutely with you. So this is really where I'm sat today. I'm just going to go back to Bitcoin very quickly to finish this off, just to kind of provide a little bit of context, because I know a lot of today has been be patient, wait for opportunities, etc., which I know people don't want to hear, but it's what they need to hear in truth. So yeah, hopefully it's just really nice and clear. Ultimately, I was really looking for this range to hold, like I said in the report yesterday. I think that there could potentially be some good long opportunities from the value area low and the range low here. But did we get an opportunity? No, price just completely blitzed through it. So then we reconsider and we say, okay, so let's imagine this just for a second, that you are bearish on this, right? You don't have to have the same opinion as me. Of course you don't. The whole beautiful thing, one of the very few remaining beautiful things about the human race, in my opinion, for all the crap that's going on in the world at the moment, is the fact that we're all very, very different. We have differences of opinions. And one of the most powerful things you can have as a trader or in life is to educate yourself to a level where you have real belief that's on a foundation of knowledge and empathy and understanding. And with trading, it's exactly the same. So if you're in there and you're like, actually, do you know what? Risk is weak at the moment. I don't like what's happening with the indexes. I think this geopolitical situation is really going to kind of be a little bit of a kicker. Well, you don't have to, you know, follow my plan on this, because there's a perfectly valid and potential short setup here as well. If we apply the same principles, we're taking this from the high to the low. Here's our beautiful expansion. And now actually we're in a really nice little place to take an intraday short, right? Because if we look at it here, there's obviously not a lot of volume going through this. We'll drive this onto the lower time frames as well, but we're in these areas of low volume here. So I'm going to actually combine these two, even though there is a little shelf in the middle, just, you know, for the sake of this example. It looks a little bit like a weird pink peachy color, but it's supposed to be red, but it's because it's over the bluey gray box there. So now I'm saying to myself, okay, well, price has run into this. Where could I look to be active? Well, we could look here at the value area high. We could drive even higher up into this large area of low volume as well, which then would also give us an underside retest of the range. So shorts from here or shorts from here, fine. And then you're saying, yeah, but hang on, BC, so you wouldn't be going short from here into here. Well, I wouldn't. This consolidation through here, and even if I look at it like this, yeah, that would be an area that would be quite key for me. Very, very simply, again, just looking at the downside wicks into here, resistance here. And then I do like to try and anchor to these bodies as well. Otherwise, you can just, you know, you could draw it down to include all of these wicks, etc. Just becomes too large. For me, these are the key kind of areas where we saw these rejections. Rejection, large move, rejection, large move, rejection, slightly less. So we see this sets a higher low. Then we get that nice expansion. Once again, in the expansion move higher, 1, 2, 3 candle pattern. Yeah, the 3 candles. And here's the gap. Yeah, price just taps into this gap here. Tricky one, this, because obviously we didn't get the close outside of it, but we did have the structural shift here and we did create the gap. All right. So the reason I'm drawing that in is because if I want to go short here, obviously I'm thinking about this more intraday. then, well, prices had the bounce from here. There's no reason we wouldn't look to retest this area again. All right. So that could be the playbook there. You could look to take the short down into here, reassess, see if price hold this, and then look to take the long further up. So if we very quickly do this, if I was looking for that short trade today, right, price has come back down into this area of low volume here again. So as we see this coming up, it's led to this. If we're then going to break down further, then I just want to know the range play here. Yeah, so I'm going to come up into this area, go across here. I'm looking on here as well, just to see if there's any other areas that are really clear and obvious that I'd want to kind of draw in. And it looks really nice. I do just think if we got a really strong breakdown from here and a retest, and you had that, you have that short higher time frame bias, then again, you're looking to trade this range here. I, again, probably wouldn't be too keen to trade the breakout on this with the resistance that we've got up ahead, but just applying those same kind of simple principles and using volume to just kind of break it down and just pick those areas out to be a little bit more accurate. All right, everyone. Well, thank you for listening to me ramble on again for about 55 minutes. We did manage to finish just at that one there. So we finished a few minutes short, which is a miracle for us for a change. This is where I'm at today. One more little down move. Nice. Well, there you go. Again, I can absolutely understand it from both sides at the moment. We've had that big flush out the market, low liquidity conditions at the moment. I'm watching with really keen interest to see how this develops today. I've got the meeting with my amazing analyst team this evening, where I get the thoughts of Just Peer, Trading Tank, obviously as well, the amazing input from the fundamental and on-chain side of things that we get from KZM, and Taha as well, who's just a magnificent traditional market trader. So you're going to kind of bring all that together, really kind of draw on the pod's knowledge without really influencing each other either way, and see what we get out. And then, as always, updates will be shared with members tomorrow. I do believe, by the way, if you are interested, I know I'm terrible at shilling these things. I should be better at it, really. But if you are interested, I think you can still get the Christmas offer at the moment, 20% off. If, for whatever reason, they say you can't, just come to me, and I'm sure we will honor it for you. All right, everyone. So just thank you very much for joining in today. Hey, Jibril Master. Sorry, we're just finishing up, mate. It's really wonderful to see you, mate. Good. Hope you've had a wonderful Christmas and New Year. And yeah, hope the year is kind for you. I'm going to be back with you all on Wednesday. All right. And then we'll be here at this is where we will be doing our chart request Wednesday as well. So if you've got anything you got interest on, if you've got any little plays that you took that you want to share, come and let me know. Be happy to discuss them with you. Jojo, thank you as always. Craigie boy, Jibril Master, great to see you. Hope to see you on Wednesday, mate. Shay as well. Had some real legends back in here. Our very one and only Whack. And everybody else, apologies if I've missed you. Do let us know. Craigie boy, everybody else, have a wonderful day. I look forward to seeing you all out there on Wednesday.